I always say context is key. Context is everything. If you're scalping without context, you're gonna have a hard time. It's the way the market moves and why it moves. Now, I've talked a ton about context, and the entire candle by candle series is designed to teach context. But let's jump out to context's bigger brother, perspective. Hey there, John Henry here, SSFTG. I hope your trading profits are mountainous and your trade plan unassailable. If this is your first time watching one of our videos, welcome to the channel. I would love to have you on the crew with us, so make sure to like the video and subscribe to the channel so you don't miss out on any of our new content released every single day. The heat of the moment can get the best of us all. The market's screaming away and you start to feel that creeping urge of FOMO, and you begin hunting for an entry. Uh-oh. We know how this is going to end, right? Now, as far as perspective is concerned, there's a lot of different ways that we can utilize perspective, so make sure to hang out through the full video to see all of the different examples and how we use this through the entire day. One of the first things I do before taking any trade, and one of the major reasons why I have a chart in the corner of the screen here of larger time frames, is a perspective check. When you hone in on the entry time frame just by itself, we very easily lose sight of the grander scope of things, and we get swept into moves that you normally would have never traded. A trend could look super bullish on a 1,000-tick chart on the micro NASDAQ. It could look incredibly bullish on a 5-minute chart of the S&P. But if we were to even zoom out to something like a 15-minute chart, we could very quickly see that maybe the bears are dominating the market, and this is more likely just the buyers getting into a trap, and it's going to be more profitable in the long run to hunt for short opportunities instead. So context may be everything, but we can't have context without perspective. Or at least true perspective. So doing a quick perspective check snaps that FOMO issue right out of the picture, because when you gain perspective, FOMO becomes very expensive based on where the stops and the risk have to go. You don't even need to utilize larger time frames, really. Just scrunching the chart out to see what's happening can be enough to help gain perspective. As an example, the S&P looks incredibly bullish here, but if we simply just grab our price axis and time axis and scrunch it further out, all of a sudden now we can see, wait a minute, this is actually coming into a zone of possible resistance, not bullishness. Now, if you've been in our live trade room with the rest of the VIPs before, you'll see me do this constantly. I'm always scrunching the chart back and forth, and even more so when I'm close to a trade entry. It's key in understanding where we are in a cycle and what to expect next. Side note, make sure to register for a 1-week trial to the private VIP live trade room with a button right on the main page of ssftg.com. Let's take a look at some examples here in gaining perspective and how that could be a huge game changer. A really good example of this would be something when you get really, really close to the market. Now, here's a chart of crude oil at the moment, and this thing just looks like an absolute sideways train wreck. It looks like you'd be better off just not waking up and trading crude. You'd be better off just staying in bed all day. It'd probably be even more profitable, to be honest. But when we're looking at this context and we say, wait a minute, the context may be sideways, but we do know that sideways generally means consolidation, and consolidation usually means a coiling spring before the spring breaks. So all consolidation is just that spring getting coiled up. But which way is this thing going to go, right? Is it going to go up? Is it going to go down? We have no idea without gaining a bit of perspective. If we zoom out a little bit, we can see that it would be incredibly more beneficial for me to look for buying opportunities, because the buyers are very, very obviously winning this fight. Now, sometimes it's incredibly obvious like this, and we're using a 5-minute chart in comparison to a 15-minute chart, and even just a 5-minute chart zooming out a little bit. If you look at the 15-minute chart, it's even more obvious. But you don't even necessarily have to do that. Like we saw on the faster time frame, it's something that we can utilize just by scrunching the chart together. One of the most obvious ones for me, of course, when we're looking at these faster time frames and scrunching them together would be the NASDAQ. The micro NASDAQ is one that I'm constantly utilizing and zoomed into a pretty tight scope of frame. It's kind of difficult to see. Like, this looks like the market is going pretty nicely bullish. But before I execute any kind of trade in here, I always will do something like this, where I get a little bit of a zoom out, make the chart a little bit bigger and see where are we in the grand scope of things. Well, realistically, it seems like the buyers are holding the lows. Maybe this is a channel high. We could be coming up in towards some resistance here. And, well, if it does want to go further, the next zone is going to be settlement, right up to 14,800. So realistically, if I'm looking to be a buyer here, I'm limiting myself. I don't have a whole lot of room to continue going. Not to say that it can't break the high and just keep on trucking all the way up. We've seen that before. But from a risk perspective, if I were to buy, where does my stop have to go? Right, this is where things get incredibly expensive, and this is why it kicks FOMO in the pants. Because when you look at this and say, all right, I want to be a buyer. Yeah, I'm going to be a buyer. Now, where does my stop go? Well, I could put it here, I guess, or here, or here. But then there's not anything until here, or maybe down here. Well, these might not look like they're very far away, but if we look at the current price down to some of those lows, that's 140 ticks. So you can very quickly detach yourself from the FOMO when you start putting yourself into perspective. Like I always say, context is everything. It's the key, it's king, it's whatever other moniker you want to give it. But its big brother is perspective, and that will always be the emperor. I hope this video helps you in understanding perspective and its importance in trading. If you have any questions, topics for a new video, or anything in between, make sure to drop them in the comments below. I always love hearing from you all. Thanks for watching, and we'll see you in the next one.